How do you assess farm sustainability for investment? Imagine planting a seed today that grows into a farm providing food and income for decades. How do you know that farm will stay healthy and productive over time? That's what assessing farm sustainability is all about. It's like checking the health of a long-term investment, but with a focus on the land, people, and profits. First, you look at environmental performance. Ask how the farm manages its natural resources. Is the soil healthy and protected from erosion? Are water supplies used efficiently and kept clean? Check nitrate levels in groundwater and see if fertilizers and pesticides are used responsibly. Also, consider the farm's greenhouse gas emissions and its impact on climate change. A farm that supports biodiversity by growing different crops or maintaining wildlife habitats shows good environmental stewardship. These factors tell you if the farm can keep producing without harming the environment over many years. Next, social responsibility plays a big role. Think about how the farm treats its workers. Are labor practices fair and safe? Is there inclusion of women and young farmers in decision-making? Does the farm provide training or support to improve farming skills? Community involvement matters too. Does the farm contribute to local development or support nearby towns? Farms that care about their workers and communities tend to be more resilient and have a stronger social license to operate. Then you examine economic viability. How does the farm perform financially? Is its income comparable to regional averages? Are yields per hectare high enough to cover costs and generate profit? Look at input costs and how well they are managed. Can the farm access markets easily and sell its products at good prices? Larger farms or those part of cooperatives often have better resilience. A farm that stays profitable despite market ups and downs shows strong economic fundamentals. To make this process easier, use established tools and frameworks. The Sustainability Assessment of Food and Agriculture, the Farm Sustainability Assessment, and the Global Farm Metric are examples. They provide standardized ways to score farms on governance, environment, economy, and social factors. These tools help compare farms and track improvements over time. It's also important to consider local conditions. Different regions face different challenges. Use life cycle assessment to see the environmental impacts across the entire production process. Compare scores across farms or regions to find best practices and risks. Check if the farm aligns with local policies, certifications, or market demands for sustainable products. Tailoring the assessment to specific conditions makes your evaluation more accurate. For investors, applying these metrics during due diligence helps identify farms with lower environmental risks and stronger social support. Focus on farms that show ongoing improvement in sustainability indicators. Engage with farm operators to encourage better practices that boost long-term value. Regularly monitor sustainability performance to ensure the farm continues to meet your standards and adapts to changing standards. In the end, assessing farm sustainability for investment is about balancing environmental health, social impact, and economic strength. Using clear metrics and considering local factors helps you find farmland that is not only profitable but also resilient and responsible for the future.